What's up, everybody? Good morning. It's 5 a.m. I can't sleep. So let's talk about what futures trading is and how to do it. We'll cover a few things in this video. One, what it is and what it means to trade futures contracts, how to trade them either as a cash account or with prop firms. And then we'll cover some individual commodities like gold, silver, oil, grains. We'll cover a few things and then we'll talk about how they move point to dollar. If you don't know what point to dollar is, you'll learn. Just stick with me here, all right? All right, let's start with the basics. What is a futures contract? It is simply an agreement to buy or sell something at a specific price on a future date. Some of the top 10 commodities being crude oil, gold, natural gas, silver, copper, wheat, soybeans, corn, coffee, and sugar. But along with commodities, people also trade futures contracts on things like the Nasdaq or Bitcoin, Ethereum. Um, there's a ton out there. We'll go over some more stuff later. I just want to cover the basics. So let's say today I agree to buy this apple for $2. Okay. Sometime in the future, whenever that contract ends, well, if the price of this apple goes up, um, I win. If the price of the apple goes down, I lose. I'm sure some of you are wanting a little more um, in depth on how futures contracts actually work. I'll do that for another video because it'll probably be half an hour long. I'll take the time and we will actually break down the science and the economics of how they work and what their impact is. There's a few things that draw people to trading futures. One of them is leverage, control a very large amount of money with a very small amount of money. There's two-way trading. So you can trade the upside of this contract, but you could also trade the downside as well and make money on both of them. Um, there's a lot of fast movement in it, especially during New York market. There's some parts of Asia and London that have it as well for different commodities like gold and NQ, but for the most part, it is fast moving. People love the action. There's also a very clear price on it too. These markets are global, so it's not going to be different in Beijing than it's going to be in Africa. This is a global market, all of them the same all the way across the board. I'm sure some of you are wondering, what's the difference between trading stocks and trading futures? So, trading stocks, you buy shares of a company, you own part of it. Those are your shares. The price goes up, you profit. The price goes down, you lose. Stock trades on an exchange, primarily like New York and Nasdaq. You can hold stocks long term. There's no expiration date on them. You typically need more capital than you do in futures, and shorting stocks can often be difficult because you need to do something like options in order to maintain that leverage. Now, the difference in futures is, as we've gone over, futures contracts is an agreement to buy or sell an asset at a future date. So you can trade stock indices like the S&P 500 and the Nasdaq, commodities, oil, gold, corn, the top 10 that we covered earlier. There's way more than that. And they often trade on exchanges like in Chicago Exchange. So, and the takeaway from this is there's no company ownership in futures. The leverage is built into the contract itself. You can trade up and down equity. Okay, so you can very easily flip your position like this and be trading the reversal on it. And then the contracts do expire, and oftentimes most exchanges will require you to close that contract by end of day, which is 5 p.m. Eastern time. I'll put a little comparison chart up here. If you want to review, just pause the video. All right, and next we're talking about contract sizes as well as their dollar to dollar or your points to dollar, however you want to call it. All right, the two most common contracts are going to be micros and minis. And there's a pretty big difference between the two. First, we're going to cover micros. So we're going to cover gold, silver, NASDAQ, and ES, which are one of the four most common ones to trade. So let's use gold, for example. So gold moves $1 in each direction. Your contract moves $10. And then if you're a tick person, that's $1 for 0.10 ticks. So silver's $5 for 1 cent. So if silver moves 1 cent in either direction, that is $5 per contract. Nasdaq is $2 per point, and ES is $5 per point. And here's a fun one now, which are mini contracts. This is what I like to trade. 1 sec here. Gold, $100 per $1 trade. Silver, $50 per 1 cent. Nasdaq is $20 per point, and ES is $50 per point. And don't worry if you didn't catch it. I'll make a chart and I'll throw it up here right now so you can screenshot it or take a picture. It's currently Saturday morning. Um, Futures market opens up at 6 p.m. Eastern on Sunday. When it opens up, I'll throw up a side-to-side comparison with my 2 Trade of 8 accounts. And then what we'll do is we'll trade the same commodity, one on futures, minis, one on micros, so you can see real time what the difference is, how quick the movement is. I think that's probably a pretty good visual example. And I think this is the segment that everybody's been waiting for the most is where do we get started? You know, how do I start trading futures? Where do I go? What am I going to download? Um, you know, what am I doing? So we're going to cover that in this segment briefly. We're going to get you started, going to get you pointed in the right direction. So don't worry about a thing. The first one we're going to cover is prop firm trading. What is a prop firm and what are the benefits and drawbacks of trading with a prop firm? One of the biggest benefits that you get from trading with a prop firm is you're not using your own money. You're going to pay for an evaluation. That's going to be anywhere from $20 to $200 or $300, depending on who you use. I'll throw a list of the top 10 prop firms up here as well, for you to review. And this is not in any particular order. This is just the top 10 most popular. And a very easy way to make comparisons between the two and see reviews that other people have left about the prop firm is propfirmmatch.com. They're awesome. Not sponsored by them. Would be super cool if you did, just saying. But they have been very helpful, but they also give discount codes, and they show the sales that are going on. A lot of these prop firms do sales during New Year's, Christmas, holidays, stuff like that. They're trying to attract you in to buy their evaluations and trade with them. Now, all of these evaluations will be different depending on the prop firm. There's not enough time or space that YouTube can offer me to go over everybody's specific rules. There is very finite, specific ways that you trade all of these, some with interim day drawdown, consistency rules of different percentages, how much money you can make per day, how much money you can lose per day, how much money you can make and lose per trade. There's specific times that you need to stay in the trade. A lot of them won't let you roll contracts over to the next day. They need to be closed by like 3:59 p.m. Eastern. There's a ton of rules. So I recommend whenever you do find your prop firm that you're like or you're interested in, is scroll through their sections there, review their requirements for getting to their PA or their pro accounts. That's what you get after you pass your evaluation. You go to a simulated live account that you trade with them for a certain period of time till you reach the payout requirements. And along with the evaluation rules, each one of these prop firms has vastly different payout requirements. Apex requires you to trade 8 trading days, with 5 of them being profitable, over $150, and you have to meet a minimum buffer. There's some like Alpha Futures that you can get a payout in 2 days, but you need to meet a 50% consistency and you need to make like a $9,000 buffer. There's ones like TPT, which is honestly my favorite. Would be super cool if they would, maybe throw me a couple promo codes I can shell out to you guys just in case y'all see this video. But they're absolutely my favorite. You get past your evaluation, which is one of the easier ones, one of the more expensive, but one of the easier ones. Your requirements for getting your payout is you need to make $4,500 in that account. but you have $4,500 interim drawdown. Interim drawdown is the maximum loss that you're taking, whether you're closing the trade or not. But after you hit this $4,500, you're able to request a payout. 4,500, anything over that amount, you're able to request the amount past that 4,500, and you get 80% of it. And after you reach like $11,000, you go to their live account with them, where you get 90% profit split. But I mean, the benefit there is pretty great with going with the prop firm. You're not using your own money. You're not risking your own capital. And a lot of people are like, well, maybe I'll just go with a live account. Like, the minimum you need to effectively make money in futures on a live account is about $50,000. Because of that amount of leverage, depending on who you trade with, they may require you to leverage your entire $50,000 in order to hold maybe a 2x or a 3x position with them. So you can very easily lose that 50,000 with that 2 or 3x position. All the money is yours when you make it, but you accumulate all the risk. You're taking all of the risk yourself with your own money. Now, prop firms, they are not free money. They do not do any investment for you. There is no guaranteed income or profit that you're going to get from them. Honestly, if you do go this way, you're going to blow accounts. You're going to blow evals. You're going to blow prop firms. You're going to get mad at yourself, and that's fine so long as you learn from these mistakes, man. And that's what I'm hoping to do here, is show you guys all the mistakes that I've made so that you don't make them. You don't waste your money. You don't waste your time. You know, try to save you a little bit of heartache. So what happens when you blow an account? You blow an evaluation. You spent, let's say, $100 for this evaluation. You took it into maximum drawdown on the first day. You blew the account. Well, do you owe them that $4,500 you lost? The answer is no. You do not owe them that money. That is the benefit of the prop firm, that you are trading with their capital. You are trading a simulated funded account, and you are going to reap the benefits from doing that if you can stay consistent, have good risk management, and develop a trading strategy. And we can do that stuff too in a different video. I also regularly cover these three things in our live trading sessions in the Discord. It's free if you want to join. There's no free Discord with a paywall behind the premium part of it. There's no premium. It's free for everybody to use. Come hang out, man. You can comment. You can throw some funny memes up there. We talk about all of our good trades. We talk about all of our bad trades. We assess trades together as a group when we look at things in the morning, typically pre-market, like 6:30 to 7 a.m. Eastern is when I like to hop on. But we trade live and we cover all those things within it. We cover charting, we cover what to do on profitable days, we cover what to do on not profitable days. So if you're interested, join us. Just comment. I'll send you the link directly in the comment. You can copy and paste it right into Discord. The key, most essential program that you're going to need to be successful in this is some charting software. There's several different ones, but by and far the most popular is TradingView. It's the most popular and is the most affordable. TradingView is free to download. It's free to use. They have an app, also free on your phone. But if you want to trade futures, you're going to need to pay for real-time data, and I'll show you what that's like here in a minute. Some of you will be very familiar with this. Some of you won't. We're currently on TradingView. We're looking at gold futures, 5-minute chart on the top, 1-minute chart on the bottom. If this is Spanish or Greek to you, that's fine. I have a whole video about candlestick structures. I have a whole video about charting and different types of setups we look for. I'll put that at the end. I'm just showing you this now to get you started on how to get TradingView set up. As you can see here, TradingView has a bunch of different plans. You can use this program for free, but I highly recommend choosing at least one of the basic ones. I'm currently on their premium plan. It has probably a little bit more than I need, honestly, but I like the ability to stack the indicators the price alerts, and then having multiple watch list alerts. That helps me. But honestly, just starting out, you'd be just fine with this. Their essentials plan, it's $24 a year. It's going to be hard to beat that. $24 a year. All right, the first one you're going to need here is this CME group. See in the free column here, there's a 10-minute delay. You do not need to pay for this professional one. You are paying right here, you're paying $7 a month. Okay. This is absolutely essential to have the correct data, and I'll show you what's included in this. So your equities, so your Nasdaq, which you're going to trade, your metals, which you're probably going to trade primarily gold and silver, your micro and mini futures. I don't so much trade these. If you do crypto, crypto is also included in this. Crude oil, energy is included in this. And then some European Forex, agriculture, and then some other stuff that's irrelevant. The second one I like, which may not be essential to you, is the US stock market bundle. And this includes absolutely everything. This includes stocks, ETFs, everything you're going to need and able to stay relevant. And the reason I say this is relevant because if you're trading Nasdaq, if you're trading the top 100 stocks, the top 10 out of those 100 make a very large impact on it. So oftentimes I stack off to the side my Google, Nvidia, Microsoft, Broadcom. I stack off these top 10 or 20 on the side and I see how they're moving as a whole, because that is going to greatly affect how NASDAQ futures moves as a whole. If we're looking at a big stock slump, I'm looking at, where's my opportunities to short? Where's my opportunities to go long and turn this around? So I think that that this data is important for me. $9 a month. I think annually, if you go to the annual plan, it's like $100 a year. All right, I believe the educational portion of this video is done. We've reviewed the basics of what futures are, contract sizes, how to get some charting started. And what I'd like to do is in this next portion, just give you guys a visual example of the different types of contracts, how they move in comparison between micros and minis, so you can see what a 1x versus 10x leverage looks like. And in that, just stick around because we're also going to pull up another very important piece of software that I don't want to do right now because markets are closed. It's called Trade-Evade. Trade-Evade is where you're actually going to execute your buying and selling on. So hang out. We're going to go over that. Stick around. All right, time for the demonstration portion of this. And right now we have a freshly loaded 300K evaluation from Apex, which is not one of my favorites, but they are also the cheapest. And if you look over here on the left, we are currently on Nasdaq Micros. MNQH6 is the current contract for that. We are in one contract. I just want to give you guys a visual demonstration of how price action moves in comparison to the different contract sizes. So we'll enter in one contract here, one micro.
Order filled.
That's it. Sell market. We don't often use these down here. However, you can set stops up and down here. I'll go over that while we're doing this. So I've just entered in one position here. It shows you your position. At the top right here, it shows you your open P&L for that trade, as well as your total equity available. And this right here under the positions tab will let you know your total amount in these positions. So let's sell another one.
Order filled.
So you can see now 2, 2, and the total P&L for those two. So let's say I've just entered in my shorts here, and this is based off of nothing. We don't have any charts up. We're just doing this for demonstration. Say, oh man, oh no, my trade's going bad. I better put a stop loss in it here. So what I need to do is I have 2 contracts in. So I'm going to come up here and say, this is as high as I'm willing to let this trade go as far as a loss. So we sold these, so we need to buy them back in order to stop this trade out. So let's see if we can get a forced stop on it. And let's say it doesn't stop us out. It turns back around, it goes in the direction we want it to go. I want to take profit at a certain area. Let's see here. I'd like to see it take profit back down where it came before. So we'll put the same order in there. So we're currently in sells, so you need to buy them back in order to stop it out and buy them back in order to take profit. We'll sit in this for a second and let it run, and I'll fast forward it so you don't have to worry about it.
Order filled.
All right, we're back here. As you can see, the order is filled where we placed it in our profit taking area. And this breaks down, shows you both of your entries and how much each one of those entries made, $23.50 and $12. Now, this being basically a sim account, these are not always accurate. You are going to have slippage, and that slippage is going to depend on the difference between the bid and the ask. Now, that may not always be a big deal here in NQ, but this next one we're going to go over, bid and ask, is very important, and you can get bit very, very quickly. All right, let's move over from the micros to the minis. So this is the same ticker symbol without the M in front of it, and we're going to show you what two contracts looks like here. What you saw was the dollar per dollar move. I believe this is the $25 per dollar move. So we're going to sell this.
Order filled.
Our order is filled, and you can see immediately the difference in our profit and our loss here. And what we're going to do is we're going to fast forward this also, let it pan out, and you can see how quickly you can lose or win these trades.
Stop filled.
All right. Finally, that took a lot longer than I thought. For you, it's going to be a few seconds. For me, it was almost 15 minutes. But this is just to give you an example of how much it moves. So much like our M&Q, where I just switched back over almost the same amount of take profit and stop loss. Our profit was what, $13, $14 on that, something like that. This same amount took us $840 into drawdown. So that is the difference between trading micros and trading minis. So be very careful when you're entering these positions to make sure that you are in Tradevate and you are on the right tabs, because I have done it. Many others have done it. Professionals still do it. When you're in the wrong tab and you enter in 5 or 10 minis instead of 5 or 10 micros. I swapped over here to silver, which is one of the most volatile, and I want to show you guys how this can be. We're going to go in with
Order filled.
5 minis. I want you to watch this P&L up here. So we sold 5. We want to buy 5 back in order to get out of it. And keep in mind, it is $50 per cent. So look at that. We're already up 1,800. We're already up 2,000. We're going to move this into profit. We're up, still up 2,000. So now we are in profit, so it doesn't matter. We're good. We get stopped out.
Stop filled. Stop filled.
Big whoop. We made $600 on that trade. Just like that. That's how quick it is. But that's how quick it goes too. It cometh, it goeth at the same speed. So be very careful when you're sizing and you're choosing your commodity, whether you're going to trade Nasdaq, ES, or gold or silver. Do a little bit of research, or just rewind back to that chart. Take a screenshot of that chart and save it off in your phone somewhere so you can watch it and make sure you're sizing accordingly, because depending on the size of account you have, your drawdown could be anywhere between $1,500 or like these 300Ks that have $7,500 drawdown. And also, we reviewed this too, is you need to know the difference between end of day drawdown and interim day trailing drawdown. Very important, because you can eat up accounts very quick and still be in a good trade and still and pop the account because of that interim day drawdown. Very, very important. And if you do decide to trade this, pay attention to the bid and the ask. If you're going to go in larger sizes with something that moves $50 per 1 cent move here, and if you look over, it's kind of hard to capture, but I see the bid at 76 cents and the ask at 78 cents. That's $100 already difference in your trade. So you may enter in your trade, get filled out $100 in the green or $100 in the red just to begin with. So please pay attention to your bid and your ask. And if you don't want to get buggered up in this, you can put in limit orders. And you're going to put in your limit order the same way that we just did our stop losses and our take profits. So I'm just going to come up here. I'm going to tell it to buy 5 when we break the top of this. Let's say I think it's going to go up. I'm putting in a order to buy 5 at this price, which is 76.81.5. So let's let this one pan out. We'll show you, watch it do an autofill for you. And what we'll do is we'll put one on the bottom too, and we'll let this order fill in either direction.
Stop filled.
All right, it has filled our order. We want to drag our stop up to keep us in this trade. And drag it into profit. If it takes us out, doesn't matter. So far we're up like 1,200. Bump it up a little bit farther.
Stop filled.
All right. That was $870, just like that. But that's the idea behind putting in a limit order for yourself. Let's say you need to walk away and your trades, your setup is here, it's coming. Pop your limit order in, push it down here, hit sell or buy, depending on what you want to do to it. And don't miss your trade. Same thing with putting your stop loss in here too. You need to step away for a minute. You need to get on the phone. You need to go walk the dog. You need to put your stop loss in. If you don't, you will blow accounts. I understand that stop loss is a controversial topic, especially amongst, these big time Instagram traders. They're like, oh, I can't tell you how many times I've been stopped out of a trade because of a stop loss. Dude, they're right. They're totally right. I have been stopped out so many times because of a stop loss, and the trade continued in my trade direction. But I've also been really glad I had a stop loss when NQ or Gold decides to do one of these big FU candles and blow, 20, 30 points in the other direction, which would have popped my account. I would have rather gone down $1,000 on the day than hit a $2,500 drawdown on an account that I've been working on for a week and have it blown. Man, thank you guys so much. So much for watching. I really hope I was able to answer all of your questions and give you a very basic guide on where to start and what to do and how to do it. If I need to make more in-depth stuff about how to use trade evade or how to set up your stop losses, there's also different types of stops too. We can do we can put in limit stops. We can do trailing stops, which will automatically uh, fall with your trade, point to point as you move into profit. There's a bunch of different cool stuff we do. I just wanted to make this just to get everybody started. There's a lot of questions, and a lot of the questions stem from, what do I do? Where do I start? So I hope this was helpful. Thank you so much for watching. I appreciate you guys. Spend some time with your family. Go outside, touch some grass. If you're near the ocean, jump in the ocean. If you're not near the ocean, I don't know, roll around and feel. I don't know what you not ocean people do, but appreciate you guys. I'm out.